Okay, so we've got Canadian CPI coming out, and we have a few different numbers. We have the CAD CPI regular numbers, headline numbers, and we have the CAD CPI Core. And interestingly enough, in most countries, the headline numbers are usually higher than the core numbers, but in Canada, the core inflationary numbers are higher. We're basically going to get four different numbers. We're going to get the months-over-months number for the CPI headline. Then we're going to get year-over-year number for the CPI headline. And then we're going to get months-over-months number for the CPI core and year-over-year number for the CPI core. Now the main number is the CPI core. That's what everybody focuses on, what everybody talks about. I am happening to focus here on the months-over-months number because I'm thinking it may be released slightly faster than the year-over-year number, and we want that speed. If we want to click the buttons there and try to get in before the spike. But honestly, the core year-over-year number is probably the number that the bank looks at. But there shouldn't be any conflicts from the monthly number to the core number, because the monthly number is included in the year-over-year number. I've set my triggers at 0.2% either direction, and here's the reason. Well, first of all, as you remember, Canada wasn't doing too well last year and towards the beginning of this year. A lot of the indicators were signifying slowing growth and slowing situation. And everybody was expecting Canada to cut rates because they thought it will be greatly affected by the US slowdown. But it seems like the opposite is happening. As the US is slowing down, Canada is actually picking up pace. And what has actually happened is that Canadian bonds were losing ground throughout 2006 and towards the beginning of 2007, but starting March, in the last couple of months, the bonds have been gaining some ground. That means that there are some speculations now that the Canada may actually have to raise rates instead of cutting rates, and possibly to curb their inflation. However, the opposite side, the flip side of the coin right now, is that the Canadian currency is at a very high level. For example, the loonie, or Canadian dollar, against the US dollar is very close to being close to 30-year high. So I think the level is at 0.930 or so. So if the price approaches 0.930 and breaks it, that would actually set a new record high for Canadian dollar strength, and it would be the highest level since basically I believe since the 70s, since 1970s. And and that would be a major thing, kind of like when the GBP USD broke the 2 level. We have the similar situation on USD CAD, the 0.930 level. So as you can see, the US dollar is really losing ground against many different currencies. All I know is I'm really glad that I don't keep any savings in the US dollar. And been actually, because of that, have been gaining. But here's the thing. The Canadian dollar has strengthened by close to 10%, I believe, in the last several months versus the US dollar. And because of that, it's affecting it. Generally speaking, when the currency is too strong, it affects manufacturing activity negatively. And Canada is one of the few countries that actually has a positive trade balance. That means that they actually export more than they import. So manufacturing sector is important in Canada, and manufacturing sector can really affect inflation. So in this particular case, they are expecting inflation to come out at about 0.1% in April versus 0.3% in March. And mostly it's due to the fact that the US is slowing down and the fact that the Canadian dollar is so strong. But if for some reason we see a surprising jump in inflation by plus 0.2%, I think it would be a reasonable sell on USD CAD. I think we may easily see a move of about 50 pips. On the other hand, if the inflation comes out at negative 0.1, it would be a very big surprise, and we may see USD CAD recover some ground by about 50 pips or so. Now, Canadian dollar inherently is very strong. When yesterday we saw the US dollar strengthen after industrial production and relatively good, I mean, a little bit better than expected, I mean, housing starts. You know, after those two indicators, it seems like US dollar strengthened by 50 pips in the next few hours against the GBP USD, and it's gained against other currencies as well, but it's gained the least against the Canadian dollar, which means the Canadian dollar right now is extremely strong, stronger than any other currency at this point, considering that the US has gained, more on every other currency except the Canadian dollar. And I hope I'm not wrong about that. I actually haven't looked at it myself, but I read it in one of the articles, because it does seem like it's gained a lot against the Canadian dollar too. It went from 0.980 to 1060, which is almost 80 pips. So anyway, that doesn't change anything. And on the regular triggers, I'll be using 15 pips limit triggers on my MB trading account, and I'll be using 10 pip bounds on a one-day account. And for the conservative triggers of plus 0.4, minus 0.4, basically if such deviations are hit, they're very unlikely, but it's possible. I mean, if inflation goes out to 0.5%, you know, it would be a very, very high inflation rate, and the chances of rate hikes will increase by a lot. I mean, it would be, you know, it would be huge, considering that in February and March we've had very strong inflation, and since it's a month-over-month indicator, they're expecting a slowdown, considering the last 2 months have been so strong. And on the other hand, if we see an inflation at negative 0.3%, I mean, it would be the biggest drop since end of 2005, and the Canadian dollar will probably lose some ground based on that. So that's the situation with the triggers. In terms of the pairs, you can click on the CAD crosses there to see different possibilities of pairs to trade. The USD CAD is trading right now at about 1040, and we definitely have a strong level at 1100, which may easily get tested if my triggers are hit. And 1060 may provide some resistance, but I don't think it's going to be able to cap the rally if my trigger is hit. On the downside, we definitely have some strong level at about 0.970, 0.980. So probably 0.980 more realistic. So maybe 60 pips either direction. We have room on the USD CAD, and I may still take an after spike trade even if my triggers are not hit. Even if the inflation comes in line with the expectation year over year, that is at 2.4%, and we don't see that many conflicts on the headline numbers, we may still see strength in the Canadian dollar. It may still gain back whatever it lost versus the US dollar. So we'll definitely take a look at that. If you want to trade Euro CAD, Euro CAD is at a decent level also. We have about, right now it's trading at 49.20 or so. We have room all the way up to about 49.70, maybe even all the way to 1.50. And on the downside, we do have a strong level at about 48.75 or so. So another basically 45 pips on the downside before any major resistance. But CPI, it may actually even break some important levels. So you can take a look and pick your pairs there on the CAD crosses. If you don't mind, guys, I have to set up my platforms right now. I still wasn't able to do that. So just give me a few moments here. I need to set up my weapon and all that stuff. 10 seconds. 5 seconds. Okay, came out no trade, came out higher than expected. Okay, I'm going to